All right, and welcome to this week's episode of The Capitalist Investor. You got me, Tony the Tiger. We got Derek, the Diamond Hands D.
Oh, yeah.
We got
Still
Cool
Diamond
Hands
Hands,
Luke. Yep, and then Ryan, we came up with a nickname. It's No Lie Rye. There we go.
No lie, Rye.
Yeah.
Well, it was no lie this morning on my way to work. I almost crashed my car because there's ice everywhere and snow everywhere. So,
Yeah, welcome to Cleveland.
Welcome to Cleveland, Ohio.
All right, topics we're going to talk about today. We're going to hit on some of the earnings that have been coming out. We'll be doing that for the next couple of weeks, I'd imagine. Talking about what we see underneath the surface, right? What these companies are saying. Some of them are big, some of them are smaller, and go from there.
Cue the womp womp sound, right?
Womp, womp. It's a little underwhelming, but tax season, you know, the refund shock.
Yep.
We will talk about that. Behavioral spending of the consumer during a recession. How does that play out? What is people's mindsets? And we'll talk about that. Justin Bieber. The Biebs.
I know you're excited to
I'm
talk
very
about
excited
that.
about this.
Baby.
Right. He sold his music
Clear my schedule for
to
the day.
an investment bank, you know,
Blackstone,
hedge fund, man.
really. Well, hypnosis, but
Yeah.
it was a private equity partnership. It was a big deal, big money.
Big money.
Money.
And there's big money in here. So I'm going to actually tie it to like a financial planning theme. So I'm going to lay out kind of what he did and where he was and where he's going and like was that a smart decision? And then our canceled section, some of our favorite candies are getting a facelift.
Yeah,
I guess.
Candy spokespeople.
So we'll hit that. You know, we got to leave that for the end. We'll give a little teaser, but that's what we're going to talk about. So earnings season. So it's off to an underwhelming start. Financials came in. Most of them were expecting 5% revenue decline of 5%. They're actually coming in at negative 10. So very underwhelming. And that's not a good thing. And Microsoft reported this week, Texas Instruments. And so I'll just kind of kick it off. It's very underwhelming. And, you know, you have somebody like Texas Instruments having a quote unquote somber outlook. You got Microsoft lackluster guidance, even though that they're doing well. And I think what you're going to continue to hear from this earnings season is that sale growth is growing. Like they're selling stuff, but earnings are going to miss because of margin compression.
Well, it's interesting, actually. Both top line and bottom lines are coming in weaker than expected. You can see that in Microsoft firsthand, essentially saying that all segments of their business, even including the higher growth segments like cloud computing and gaming that's been growing a lot, they're still slowing down, and they're actually maybe will drop over the next year. So sales will actually decline. And what's interesting is the street estimates for the S&P 500 for this year was about, at the beginning of this year when you looked, or end of last year, was about 7% earnings growth for 2023. Once the first 20, 30 companies in the S&P 500 reported, that estimate's already declined back down to close to 3%. So it's already dropped 4% on top line or on bottom line earnings growth.
Yep.
Typically in recessions is you see a 10 to 20% decline in EPS, earnings per share growth in the recessionary environment. So if that stays true and we do enter somewhat of a recession, we still got a long way to go, guys.
Yeah. And the one thing that was discouraging, I thought, is so last week it was kind of banks and finance, and it wasn't really the breadth of all the S&P 500. So we've added a little tech here. We've added, Raytheon. There's been some defense that's come up short. So it's really kind of, spreading. And we kind of anticipated that. But, we had a pretty good bump towards the end of last week. And now I think we lost a little steam. And so there's some big names coming. Tesla today, and we'll see how that goes. But, maybe they're an outlier. There haven't been too many good stories, though. There's no tailwinds, right? I mean, Netflix. Is that?
Yeah.
Well, the interesting thing, we haven't seen the more discretionary big names report like Apple yet or Amazon.
Yeah,
what's
get
going to
there.
happen? We're going to get them. But what's going to happen with them?
there.
Microsoft's of the world. I always surface it this way: in a recessionary environment or a more bad off environment, stocks like Microsoft actually do better coming out of it because small businesses, companies that are laying off employees want to get better technology, especially in the cloud area and the artificial intelligence area, the technology area. Microsoft's there to deliver it. Apple, you're not buying a new iPhone every single year when times are tough.
Yep.
Amazon, you're not buying as many packages. So those are more discretionary names. So if Microsoft's estimating a declining earnings, what's going to happen with Apple and Amazon?
I can't wait for Apple.
Well, that's I kind of posed that rhetorical, but there is one bright spot. So I said, is there any consumer staples? And so that's not usually the sign. The necessities of life have exceeded expectations. That tells you a little something about the consumer mindset, right? It is absolutely.
And we're going
not
to
the new
talk about the
iPhone.
consumer mindset as we go into the consumer behavioral side of things in our next couple topics.
I can't wait for Apple because not only do they have the consumer trying to buy their phones, but can they even make them?
Yep.
Yeah,
because they're trying to deleverage from China, right? So they're pumping 25% to India.
Yep.
Their earnings call, I'm really looking forward to.
Because they're still kind of standing. Everyone's been beaten up, but some not as much as others. And Apple's still kind of held its ground for the most part. It's down, but
at the end of the day, you have to remember too, the stock market from a trading standpoint, investing standpoint, is based on supply and demand, right? How more demand for a stock drives up prices, less demand for a stock drives down prices. And when you look at the trading action, price action of Microsoft yesterday when it reported, it was up 5% on the earnings report. Even though it missed on top and bottom lines, it still was up 5% because the bar was set pretty low, right? And then you look at what happened after the earnings call and it sold off actually 6% to be down 1%. Now we're down closer to 4% on the open today. So that shows you that investors still are very, very cautious and very, they're selling into any rally, which means that price action is not necessarily good for any kind of, the bulls out there that are saying things are fine and dandy and we're going to rip higher all through 2023. That's not a good sign for first quarter earnings so far.
Yeah. And, as I mentioned, like sales growth is mixed, revenues are missing. And the easy solution to that is to start cutting expenses. And that starts with human capital, AKA layoffs. Mm-hmm. And there was a statistic I saw from, it was like Career Builder or something like that, that they've interviewed 1,000 business owners, right? And 60% are expecting layoffs this year, with half of that, so 30% 30% laying off more than 30% of their staff.
Wow.
So,
but you cut costs and you might add some temporary dollars to the bottom line because you're not paying the people as much. But you're also not growing as much because employees are supposed to be productive, right? They're supposed to go out there, get business, deliver good products. So there's good and bad that comes with both of that. Yeah, you're thinning up and you're don't have as many overhead expenses, but you're also not, your growth expectations are lower. And the thing is, Microsoft's the world, the big tech names of the world are still considered growth stocks.
Yeah.
Are they really growth stocks anymore?
Well, if you're shedding employees, no, you make a great point. And then also, I saw that study as well. And so the layoffs is the scary part, but like 70, almost 3/4 of companies said they're not going to be hiring this year too. So that's pretty ominous in itself. The layoffs are the bad ones, obviously, and that's where it really hits home. But the fact that they're not growing,
it might be those employees that they overpaid for over the last 2 years too.
Sure.
Like, all right, well, I'm not getting what I wanted, or the production rate isn't what I'm looking for. So. But that's earnings season. It's lackluster to this point.
Well, we're going to be talking about it probably every week here the next 4 or 5 weeks as more come in. But it's interesting. You can draw some observations with the first 5% of companies reporting and see, like you said, behind the surface, because the more transparent you can look through, that's how we get our best information. That's how we try to position ourselves for the future.
Yeah. All right. It's tax season.
I already had
as you might have noticed
apparently
all the commercials we were saying.
I didn't even live in an area for 2 years, and they already sent me a letter that they're going to subpoena me because I didn't file my 2019-2020 taxes, even though I didn't live there, and I had to still file it, and I file an amendment, whatever. Taxes, the government's just trying to take any money they can or try to be involved in our life as much as they can. It's so frustrating, man.
Yeah.
Anyway, taxes.
I don't know. The headline, who found this article? Was it you, Luke?
I think it was DeBroca.
Okay. No lie,
rye.
Refund shock, so people are going to get less refunds this year?
Yeah, so actually that was me. I thought you were talking about a different article. Oh, no. So
qualified to speak on. Yeah, but
there is a thing called refund shock that everyone's talking about. And refund shock is that a lot of people got used to for 2 years straight with stimulus money, child tax credits, stimulus checks, which was a tax advance for the next year, following year, 2020, 2021. A lot of people got a lot more than they were used to in these refund checks. Now, that being said, if you get a refund check, as we all know, it's a free loan to the government, so that's not necessarily a good thing, right? But when you're used to past 2 years, $4,000 or $5,000 refund check, that's not going to be $2,000 or $3,000 or $1,000 or maybe even nothing. A lot of people are not very good at planning. That's why we use this, right?
So the shock is the stimulus stuff dropping off. Is
correct.
What you're saying. Okay.
Correct.
And the shock will be that the refund is lower this year than it was prior years, and so we have a lot of high financial IQ listeners here, so everyone knows the difference between taxes and tax refunds. But anecdotally, I'll just say that I'm surprised, and this is, I'm going to pick on the young people, but a lot of people don't. They think like, hey, taxes is what happens in April, and I get a check. That I get money back on taxes. No, you pay that money throughout the year. It was withheld from your paycheck, and so the refund amount is going to be smaller and less to spend. I mean, it could be stimulative when you get that check back. And
most of our clients are really well educated because we try to educate them as much as we can about what's going on in the world, and that's why we do the podcast, things like that, right? But that being said, most of America is not that well educated about how taxes work, why you get money back, how you plan for a tax refund, how you withhold money to not get money back and not give a free loan to the government. So, those people out there that didn't understand that, they might have been banking on seeing that big a check coming in that they were used to the past 2 years. That's not going to be coming in, and especially when times are tough, inflationary pressures, I mean, that can impact the economy too. That's why one of the reasons when we get into the next segment about the consumer behavior, once April comes around or before when these checks get issued, people might actually start cutting back a lot in March and April when they don't have as much savings because they're expecting these bigger checks that aren't coming.
The precursor to even what you just said for the behavioral is M2 money's drying up, so savings is drying up quickly.
Yep. And M2 is the money out there in the economy.
Out there in the economy, checking and savings accounts, walking around money, right? We're nearing $1 trillion in credit card debt. That is over 100 billion pre-pandemic. That is bananas. I saw that through one of our research reports, and it's inflation. So, I don't know how Sleepy Joe kind of spins that to, Trump, but honestly, I mean, inflation's crushing everybody.
And the interesting thing is,
because they got to put it on credit cards
Visa,
and let it
MasterCard
rack up. Yeah.
Up, earnings on deck. So we'll see if they have any commentary on that, but it's absolutely, I mean, it has spiraled. The savings rate is pretty much at an all-time low too. So it's not improving. I think
you're going to hear the credit card companies saying, yeah, I'm making 20%. But the default rates are going up now too. That is going to be what's going on underneath the surface to figure out how bad it really is.
Well, those credit cards also have higher rates than they did a couple of years ago, right? I mean, the 20% rate might be 25 or 30% now at this point, right? So that's also a huge headwind. And then also credit limits went up a lot as people made more money. Even though inflation's up a lot, people are making more money. So credit limit, the actual dollar amounts have went up a lot too, which means, from a consumer behavioral side of things, a lot of people see more money that they're able to spend on their credit card limit. And they're like, okay, I'm going to go ahead and do that. So that gives more leeway for the economy to remain strong, but not necessarily in a good way.
Or that 12 month 0% balloons to 25 after 12 months. And now you racked it up, didn't pay it off, and now you're really getting.
When it starts to compound, that's not fun. That's not good.
But that spending, that's consumer spending, right? We don't, when we look at earnings and when they report and, hey, the sectors have been strong. Has that been on credit? That wasn't with their money. That was with the bank's money. And does that say something about the economy?
Well, the charade can go on it's been going on for a year, and it can go on for probably another year.
Charade is a great word.
There comes a point in time when the charade is over and the rooster comes home to roost, or whatever that saying is. Chicken home. I don't even know.
That's got to be your chicken.
The chicken comes home to roost, and it's time to pull back. And I just don't want to see the worst case scenario. And I don't necessarily think this is going to happen. But what I don't want to see is just mortgages, people defaulting on their mortgages, people defaulting on their debt, on the car loans, like that. When that starts to spike, I mean, that's outside of the realm of politics, or not politics, finance, and whatever politics are going on. That's everyone's talking about. Outside of that, people are people, and
putting my financial advisor hat on, we always say 3 to 6 months emergency fund to pay your bills in case something happens. So whether that's health, that's jobs, that's family, whatever it may be. Like, that is why it's important to have an emergency reserve. That's
Right.
why we try and coach our clients to build up that reserve. It just, I hope, it should be hanging out in a low interest bearing account. That's
Problem
not
is,
volatile.
80% of people don't have that.
I
it's,
understand.
paycheck to
I understand,
paycheck.
but that's, again, this is an educational show, and if you don't have one, start working on that emergency fund. It's you need it.
Speaking
in
of
case something happens.
reckless credit card spending, Diamond Hands, are you still buying NFTs on credit? The credit cards, are you still doing that? Because I had some concerns about that.
Well, that's pretty much the most solid financial advice I can give out right now is to buy as many NFTs as you can with credit cards.
How are the Trump ones holding up? Are they still?
I haven't been
Are
following
they at
the
par?
NFT market. I'll be honest.
So my buddy got involved, and so I caught up with him. I'm like, so I know you bought the Trump ones, and I knew you bought on the way up. It went down like all them NFTs do, and it popped again. And I'm like, did you lick? What caused that? And did you get out? And he goes, well, I sold a couple at a loss. But basically, Trump going on to Twitter, saying he's back on Twitter.
That's right. That's big news.
I haven't seen it headlines. So I mean,
He hasn't
the agenda.
tweeted, but I'm sure as soon as he tweets, it'll be a headline.
We have to mention the Trump club championship. Did you see that?
No.
So the wherever his club is,
He's got them all over the place.
Yeah. So he missed the first day of the club championship. So it's 2 days. He shows up the second day, and basically said he played a practice round the day before the tournament was supposed to start. So he's just going to count that one for the first day. So everyone shows up to day 2 and find out that Trump is up 5 strokes.
That's a little Kim Jong-un-esque. Remember that guy?
I mean, I guess when you own the course,
That's
you
right.
can make your own rules. Like, God,
So that is as Trump as Trump gets.
being as a avid golfer and playing tournament golf, handicaps and all that stuff. I'm highly involved in all that. Someone did that, I'd pop my top, man. Like, I would go bananas. So anyway,
So yeah, the NFTs I've just been seeing on Twitter. I think they've come back up a little bit from the dead. Really, I mean,
a little bit.
they're all dead.
Good. I'm going to need that.
So
when
that
the
was a
layoffs
joke.
start kicking
In case anyone didn't catch that was a joke. I don't recommend
Then
buying
buying-
NFTs.
yes, please, yeah, the
with
disclaimer.
the credit cards. All right, so
All right. So let's get off that NFTs for a second. Derek, calm yourself down.
I was asked the question.
You're
just
cutting into
responding.
Tony's Bieber time for crying out loud.
We're not even hitting Bieber yet.
Yeah,
We're
all
getting
right.
there, man. Behavioral expectations and consumer expectations and behaviors during recession.
So I wanted to ask you guys this question. So like what the game's changed a little bit, as in consumers spend their money differently now than they did 10 years ago. I mean, 08, 09. We've got social media now. We've got subscription services out of the wazoo. Everyone's probably subscribed to 10 things that they don't even know about. You got Spotify, Netflix, all the streaming services. We go out to eat 4 times a week now compared to used to go out to eat 1 time a week. If right? So I'm just saying the consumer spends a lot differently now.
Well, is that
it's
because
more
it's been-
service based than good based? What do you guys think that? What will happen if we do have a deeper recession? What will people keep and what will they get rid of?
Well, is that spending difference that you speak of? Is that because we haven't been in a recessionary environment? A real prolonged one where there's layoff. I mean, like we've had these little flickers. We had a little, taper tantrum in 2018. We had a couple months where the market dipped and we shut everything down for COVID. But like we haven't had a sustained down cycle of 6 months to a year since 2008, 2009.
Yep.
So,
Exactly.
so are we, I don't know if it's causation or correlation, but like, are we really spending differently, or is that just how people spend? I mean, do we spend more discretionary when times are good, right?
Capitalism drives different efficiencies in different products and services, right? So every recession, in my opinion, is different in regards to the consumer. What, where people are leveraged, what people own, if they own a house, they're renting. Like,
Right.
like every recession is a little bit different. So, my take is, people will hold on to a lot of the subscription things they have because people still are dopamine hungry for entertainment. Like they want some sort of entertainment.
entertainment and instant gratification.
Yeah.
Correct.
is the society.
Historically, so that if it's discretionary historically, and that's why Staples are holding up right now. Like you can't hang on to the Netflix subscription when you lost your job and you're hungry. So, and then I mean, like you got to put gas is expensive too. So generally, like that comes down a little bit when times get tough because there's less demand. But we've got some weird geopolitical events that are causing oil to be a little bit more expensive than you might expect. I mean, China was closed down. Maybe they open it up, and there's some, the valve opens up a little bit.
They're calling for that.
Yeah, not to push back, but we'll find out, right? I mean, like how sticky is the Netflix subscription? How sticky is the 3 to 5 visits to DoorDash or DoorDash visits to you? We haven't really had a cycle where we find out about that.
Right. I mean, I've done DoorDash a few times. That is expensive.
Yeah, like I can't even this is a fascinating topic, the behavioral finance stuff, because I used to not think about a lot of stuff like the DoorDash delivery fee, like how much eggs cost at the store, and now I am looking at all that stuff.
Yeah.
I don't we don't do take in anymore. We've basically got used to that over COVID for the last 3 years, right? And it's freaking expensive every time you get it. You don't know if the quality is going to be good.
Right.
It's a whole thing. So I mean, I've
been
cooking up a storm
for my family. It's so even I'll go pick it up. I mean, it literally doubles the price to have a convenience like DoorDash. Maybe
really
even
what it feels like.
I mean,
that
so
is no
The
joke.
only way I use it is if I have a $25 or $30 off coupon that Uber sends me because I used it a good bit back in the day. But the only reason I did is because you have to be smart about everything, because I have a card that pays for the Uber One benefit that gets rid of the fees. So I mean that helped me out in regards to that aspect. But my point is that people have been going out to eat a lot. People don't know how to cook at home anymore. I mean, that's a behavioral change. Mm-hmm. You look at the younger generations, people below 35, 40 years old, a lot of people don't cook at home.
Sir, you don't cook.
I don't cook at home.
I've seen what you bring in for lunch, man.
How do you can learn
he's
to cook
prepared
anything
for the recession. He's prepared for a depression. This guy will eat chunky clam chowder out of the can.
I'll eat a chunk of cheese for lunch.
Spam and eggs.
I'm back on keto, guys. I'm back on keto, guys. So don't be mad if I bring up canned spam
think
again.
it's a good point though, and it's not like you have any relief if you are cooking for yourself. I mean, like an omelet costs $15 nowadays too, so it's it's hard
for
to
one person. Yeah. Like I was looking at those meal delivery services because again I was looking at the cost of stuff. Even though those things are expensive, they may save a single person a lot of money just by the waste that they don't have by grocery shopping.
Yeah.
Are we officially? Can we do the get off my lawn segment? Because I have
yes. You can always
like
interject that
when
at
we were
any time.
kids, like their grandmas dealt with change, and like I feel like they contextualize everything. Like in the 50s when everything became $1. Mm-hmm. It seems like everything's $10 now, and like some point I'm gonna tell my kid like, oh, I remember when a movie used to cost $7.50.
Right.
And then the kid's gonna be like, they didn't even have dollar bills, only tens,
It's just interesting when the luxuries of life that you enjoy, when you start to think about even spending money on those luxuries anymore, that's when things aren't looking too hot. And from my conversations with people, friends, whatever it be, family, like people are cutting back in certain areas, and the people are finally starting to realize what luxurious things we've had the past 14 years.
Yeah, absolutely. That Charlie Munger, is that his name?
Yeah.
Like
happy 113th, Charlie, if you're listening.
I mean, he talk about get off my lawn, but he's exactly right when he says everyone from top to bottom has it 10 times better than they did last generation. And, we're old enough now, we can look back and see that, right? Like you can go on Amazon and buy something. It's probably a third of the cost that it was back in, 1992. Adjusted for inflation,
you talk
obviously.
TVs and like there's certain things that have adjusted because technology is just better and things like that.
Absolutely. Like even look at, the difference on the home front. Like there's a lot more two people working just because of all the conveniences of home, right? It doesn't take as much time to make the home. All these things have kind of just been gradually building, and we get to this lifestyle that's completely different to what we're used to. Yep. And the shock that's going to happen when that turns around is going to be interesting to see. Because we try to have an entertaining talk here every week. We don't want to talk doom and gloom every time, but this stuff has been going on for months now. We've been talking about the same thing for a long time, and we've been covering it up, right? It's kind of been a charade, like you said. Figuring out ways to kick the can down the road a little bit more. But we're smack in it now. We're going to start to see the earnings impact and the fallout from the stock market for those earnings impacts, because everyone's starting to feel it.
Yeah.
Well, this increase in spending has propped up stocks in the economy, has propped up innovation, capitalism, like
growth stocks.
Basically, what happened the past 20 years with the internet. I mean, we can talk about the internet all day long about how it's driven consumers crazy on a spending spree. Like, ever since really the internet, like people have spent more money, on things they probably didn't need for a long time, and that's helped push the economy. And don't get me wrong, it's not necessarily a bad thing, but people got used to spending a lot of money. The question is are they able to cut back now?
So I mean, before we go on to the next subject, but concessions will need to be made. I think Ryan mentioned that, like, hey, when rubber hits the road and maybe a spouse loses a job or whatever it may happen, like, you'll find out what you're eliminating from the budget.
Yeah.
But
how much you like Bridgerton,
Right.
Better than dinner.
But but I've seen the one meme. It's like, if you don't think inflation's real or sticky, you're obviously not doing grocery shopping for the family. It's expensive out there, and you're going to continue to see this all for a long period of time, like you mentioned.
Yeah, I went to Costco this week. I don't, I'm not looking at the price of everything. I'm trying to, get in and get out. But I actually looked at the price of eggs 2 weeks ago. It was a 24-pack at Costco, $6.49. Last week, $7.49. Yeah. The first time I looked at it, it went up $1. I'm pretty sure they were between like $3 and like $3.29.
That's a 25% increase in 2 weeks.
Yeah,
that's insane.
What were we talking about the other day? Where Bill Gates.
Oh gosh.
Like this conspiracy. Like there was.
I got better conspiracy theories than that. If we want to go.
The conspiracy theory was he bought into a artificial meat company. Call it 10 years ago.
Yeah.
Mm-hmm.
Then 3 years after that, he becomes the largest, farm land owner in the United States. And then 3 years after that, we're having chicken and egg issues.
Yeah.
Is it a conspiracy?
Well,
that's your lane,
but he's
right?
doing he's doing it altruistically. I think, since he has that just amazing physique, he wants the rest of us to kind of follow that look. And
he is.
I mean, look, at the end of the day, I can quickly hit on this. I mean, this is where capitalism is great and all, but sometimes it drives efficiencies too much and innovation too much. So, like, you look at farming, you have to have live cattle, you have to service all that. It's harder work. It's easier just to manufacture these fake meat products and deliver it to, the human race to eat. I mean, it's easier to do that rather than have farmers. It's more expensive to have farmers. It's harder work. People don't want to get into farming anymore. It's more incentivized. You go to college and you get these white-collar jobs. I mean, there's a whole systematic issue here, which is concerning, because is it healthy for us to be eating this kind of things?
Well, if you answer every question in the narrative of a green answer, this is the conspiracy theory. I'll play along. But the reason, there's methane that's produced by those cows too. So not only is it a more efficient, brutally efficient means of nourishing people, but also it cuts down on a one of our carbon issues.
So
too.
Cows farting is global warming.
It's chewing cud and they burp and methane and they make it a thing.
Who's burping?
We're smiling while saying it, but it's a thing. I mean, I don't subscribe to that belief, and like I'm not giving up steak ever. Seriously, like
as long as it's around,
I'll give up guns before steak.
Little ribeye every once in a while.
But you also saw the headlines last year where you see a lot of China corporations buying farmland in the United States. Are they going to package that stuff up and send it to China? Is that
they
stay
love
here?
They love their pork.
Is that going to that food going to stay here for us? That's kind of scary.
Well, that was back when we had the Chinese trade war of the great 2018 Trump Chinese trade war. I mean, like, that was out what we were dangling is pork and soy. I mean, they can't get enough of it. They can't produce enough of it. They try.
Right.
It's just they've got 1 billion plus people to feed. They like to eat that stuff. So
yeah. All right. Moving on. Justin Bieber, the Biebs, sold his music collection for $200 million to a private equity firm.
The Blackstone, Blackstone
Blackstone
collaborative,
part of it,
Hypnosis.
So, all right, so I did the digging on this. This actually comes down to like a business owner mentality. So Justin Bieber's net worth last year in 2022 was $280 million. So he doesn't need $200 million. I mean, maybe he does.
Did
I
that
don't know.
include this business?
No,
though?
no. It's just this happened recently, so I looked at 2022 net worth. So,
They might have had I mean, that's celebritynetworth.com.
but now wait a minute. Now, so he was already making, according to online sources, $7 million per month, $84 million per year. That's probably gross. So I don't know like what it cost him to make $7 million selling his own music. Production team, sales team, whatever that might look like. Yeah. So I don't know what his pool was on that. So you're making $84 million a year and you sold your business for $200 million. Was that a smart move?
It's 2.5 times earnings.
Yeah.
I don't know the multiples in that industry. That's something that you always want to have analyzed. And of that 84 million, so he does a little touring and he's got other ventures. I don't know if it's all. So he sold the streaming rights, really the masters, right? I mean, the catalog prior to 2022, everything he's done so far.
Right.
So
you can get back in the studio and make new music and sell that, right?
And you get a paltry streaming rate, for a couple of streams, but he's millions upon millions, one of the highest streamed persons in the industry. So
the one thing I would say is like through a financial planning lens, like was that worth it? How much effort was he really putting in to make that 84 million to reap 200?
Right.
Forever. And now it's over. That stream has turned off. But now he does kind of gain control. What can he do with the proceeds? What does he want to have happen to that money? Because if we take a look at Michael Jackson, and when his estate sold 50% to Sony, they made $750 million.
Right.
So that's actually worth $1.5 billion. That's how successful the difference of success between the two singers, right? 200 million versus 1.5 billion. But Michael Jackson's dead. So now it goes to his estate, and did he want that money to work that way? So he lost control by not having that liquidity event. I'm sure he wasn't planning on passing away at age 50, but that's what happened. But Michael Jackson bought in 1985 he bought the Beatles catalog for $47 million. 10 years later, he sold it for $95 million, and he only sold 50% of it. So I think 4x'd, valuation.
It's called risk management.
This is so. I don't know. That's bananas.
I think he bought Eminem's. I don't know if it's an urban legend, but I think Eminem dissed him one time, and so as a get back, he purchased his music catalog, and
really,
yeah, and probably sold it for a profit later too.
But the article that's talking about Bieber though, they said like he's so young that like to make that money now, where you have somebody like the boss Bruce Springsteen is selling his for $500.
Well, that's his catalog up to today, though. So it's like maybe he's going to go press another album, and it's not like that revenue stream dries up. I mean, those old, you know the whole catalog. The only one I know is Baby, Baby, Baby. But like, are people really
celebrate his entire collection?
Yeah.
I mean, I don't.
You fill us in. But no, like I know he gets a lot of streams, and I know he's had huge hits, and I don't know if Despacito or whatever. I mean, how are people still going to be streaming those moving forward, or are they going to be streaming the next Bieber thing? So is it a good time to monetize it? I mean,
well, I think that probably, and I don't know much about Bieber. I don't keep up with him. I know he's young. I think he's married to
no. So he's married to Stephen Baldwin's daughter.
Okay, yeah, he's married.
Ireland?
He doesn't have kids though yet,
Yeah.
right?
Yeah. No.
So he's entering probably a new stage in his life. Is one of my thought process is, when we work with business owners, they've worked their entire life to build some nest egg, right? I know Bieber's young and he's probably been doing it now for 12 years, 10 years at this point.
Forever.
Yeah.
15
20.
years, 20 years. Okay, so I mean, I know it's not as long as working your entire life for 30, 40 years, but Bieber's done a great job building this nest egg, and he probably wants to move on to a new aspect of his life. I mean, I don't know. When you're that big and that popular, that much attention on you, sometimes I feel like you just want to disconnect. And this might be him finally saying, okay, this is my time to stop running my own shop, my own stuff. I'm going to sell out my stuff, take a liquidity event, reinvest this money somewhere else into something else that I want to do. Maybe stay off of the radar. Maybe have kids. I don't know. That's my first thought process.
But he also had $250 million behind him already.
Right.
He made his net
Plus
worth was over
$84 million
$250
income is what you were saying. So
that's turned off though.
Yeah.
But you're right. I mean, I think it's like I mean, he can get back in the game if he wants.
I mean, he's been in the game since like 10 years old. I mean,
Yeah,
he's probably mentally just exhausted about being in the limelight for so long. And like I said, I think this is him finally saying, "I've done a great job. Now it's time to focus on something else in my life." And everyone has different goals and objectives. Everyone has a different mindset on what they want out of life, right?
Yeah.
And this is probably him taking another step.
Yeah. How much money is too much money? You know, like do I really need them? You know, they'd love to hear what he had to say about it. You know, like I just want to.
Well, if he writes back, I know you wrote a couple letters, and hopefully in a future episode we'll be able to share that with you at home.
Taxes, though. That's the problem.
Yeah, isn't he Canadian? He's not going to keep any of that money anyway.
It's all poop.
Well, I think he sets up shop in California. So, good question about taxes. If it was a $200 million gross check, and it could have been through a business, we don't really know. It's speculation.
I can't believe you were reading my Bieber letters.
Yeah,
it probably
80% of that
this
goes
is another
right to
good
the
financial.
World
This is
Economic
financial.
Forum.
This is probably another good financial planning question. Is it better to take a $200 million payout or was it $200 million spread out throughout so many years, like a liquidity event payout, whatever it be? Do you know that?
I don't know.
Well, anytime you drift above $1 or $2 million, I mean, you're pretty much maxed out on the tax scale. So it's probably
but there's
probably
always
losing.
strategies.
The headline. I mean,
no.
The headline was he sold it for 200. How it's broken out, I did not.
I mean, you
deep
probably
dive
50%.
into that one, but. Maybe if he was smart, he'd like, hey, send me like $10 million for 20 years. I don't know.
I mean, I know. I mean, we've not worked with specifically probably $200 million. I mean, we're close up there. We've worked, talked with a couple people up in that range. And when we do that, there's things like opportunity zones. I mean, there's all kinds of different financial planning tax strategies that you can do to kind of get that tax bill down, right? So, I mean, there's always ways to lower that tax bill.
Beebs, call us. We got strategies for you. All right. So the canceled section.
This one hurt.
You explain it. Like my head's still. I tried understanding. I'm still blown up.
So I think everyone knows that the M&M spokes candies. I don't see a lot of commercials. So I always knew that M&Ms, they had a good shtick. There was like a red and a yellow. One was regular. One was peanut.
They were cute. Like they showed little M&Ms.
They probably sold some merch.
Taking bites out of each other, and like
so
one's klutzy and one's kind of smart-witted.
Oafish, yeah. It was like everybody loves Raymond and his brother out there making jokes or whatever. Right. Not to date myself. But anyways, so then they added a woman, the green M&M.
Okay.
Put some boots on her like Nancy Sinatra, and they had a good rapport as well. And then they started expanding. I think 2 years ago, the woman, there was a woke controversy where they kind of made her look a little lesbianish with another female M&M holding hands. Then they've added multiple people, including a full-figured purple M&M.
That's the peanut M&M, bro.
Yeah,
like,
so the cancel came from the right side this time. They're like, this is getting ridiculous over here. It was an upside down M&M to show that M&Ms could be body positive as well.
Oh my god!
You're laughing. This is what happened. So anyways, they scrapped the whole thing. There was a little bit of an outcry. People said this has gone too far. So they said, okay, maybe it is a little too woke. We're going to cancel the spokes candies.
Right. And what they're going to bring in Maya Rudolph?
Rudolph was a progressive icon. So it's like...
Are they going to dress her up like an M&M, or is she just going to be a human being talking about M&Ms? Like I'm very confused on that part.
That's the $1 million advertising question. Maybe she'll just be enjoying... like some M&Ms in a commercial, or maybe they're going to rebrand and make her CGI M&M. We don't know.
Yeah, that's what you would think, But
which way would you go?
Well, here's my thing. Like, so when I was younger, I was big into the California raisins.
Yes.
Right?
Yeah.
I was very into that. I even had a piggy bank shaped as a cow. Like, my family knew I loved that. Yeah. Then I tried to dress up as one for Halloween, and it just was a mess. Like, trying to put a garbage bag on, trying to look like I'm an M&M, and it's a mess. So I'm trying to figure out what they're going to do with Maya Rudolph. Like, thank God they're CGI.
Could they find like an old? So the raisins, they were like top 10 on the airwaves with that. I heard it through the grapevine cover.
Yeah, they had that little move with their hands.
Yeah, is there any of the song that incorporates
Christmas
like
special?
Yeah,
banger.
Oh yeah, that's for sure.
At the end of the day, we're always going to find something. The left and the right both are always going to find something to complain about. And that's where I'm at with it, is we are a society of complainers, and we can find anything and everything to cancel or complain about.
It's getting ridiculous, but we're going to continue to bring it to you on a week-to-week.
You know what? As I'm at the point, as long as it does not infringe on my personal life, I don't give a crap.
Thanks. I'm with you, Luke, but it's still entertaining. I got to talk about it. Oh, one other thing before we leave. Doomsday clock. Closest it's ever been.
That's another
90
that's
seconds?
another charade.
Are we just like overly? Is the United States just overly protected from all the shenanigans going on around the world? To be honest, like
We're getting a
Do
little
I-
bit
do
more
I feel like
involved
we're
every
closer-
day.
I'm
I'm
so-
kind of concerned that we are running like a propaganda machine here in America.
Like everything's honky-dory?
I'll be straight up
would you
that
get a-
there. I've seen videos of some protests happening because of the leftist kind of globalist perspective in other countries.
people rising up.
people rising up, protests, and we have not heard a single thing about that.
Very,
that's the
very
cool thing about social media.
That's
is
why
you
I'm like,
see
is it true? Is it not? I don't
That's
know.
why I don't know. I think we are protected here and protected in our way we think here and what we're exposed to in some ways. I just hope we don't become China. I don't want to think that we're becoming something like China where we're like a propaganda machine. I don't think we're there yet, but I just hope we never get to that point fully where we are completely isolated from what's going on.
I'm worried. I feel like the more and more you hear and think about it, I'm like, how isolated? Like, who's not telling us or reporting it? Or am I just? Did they just report weird stuff on the internet to get a razz out of people? I don't know.
Well, so like the doomsday clock back in the day was really just like hey, how close are we to a hot nuclear war?
Right.
And now we've sprinkled in the climate change element to it, so it's like the nuclear war has reappeared because Russia has involved themselves in a war, and
True.
we've been involving ourselves more and more with money.
And they got the nukes.
Guys,
And-
I've got something I need to talk about real quick.
Oh, boy.
I was watching. I shouldn't have done this. I was
California raisins, he
I
didn't
was-
get his taken.
I was watching something
The
about
reboot.
is it CE5 or something? It's about aliens.
Awesome.
And
I'm not saying it's aliens, but
it was about aliens. It's on Amazon.
Flesh and blood
It's on Amazon Prime.
extraterrestrials.
It's on Amazon Prime. It's
Amazon Prime,
it's a
okay.
documentary. And one of the takes that Ronald Reagan had back in the day, and one of the points he made
This is gonna be good.
was if there was a outer planetary threat, another civilization, another threat outside of this world, we as human beings would all come together. Is a whole.
They made a movie on that.
yeah,
It's called
it's
Independence
documentary.
Day.
Yeah,
And
Bill Pullman and Will Smith.
His
Just
point
being-
there was that we have all these conflicts that we deal with other countries, whatever it be, wars that we fight. But at the end of the day, we all are humans. And the theory is in that documentary is that he was basically telling us what is happening around the world with a globalist perspective, trying to make this one global government, one control, because we are all so interconnected more in the world. And then it gets into aliens. But the point there was...
Well, to hit me with the alien stuff, that's the
Yeah.
most important part.
But anyway, so my point is that are we going to have
Are the aliens coming?
Maybe.
What color?
Maybe they're already here. Maybe they're not.
I mean,
don't
that's
know.
why they built Hubble. I'd imagine, going back to Ronald Reagan, he built the Star Wars. Star Wars was an
That was
agenda,
kind of to choke,
right? But,
Russia,
I mean,
Soviet Union.
right? So that's protect us, but really, was it something to put in outer space so we can see what's coming?
One of the interesting points that he made, real quick, just because we're talking about doomsday, or the doomsday clock, is that most of these sightings from aliens, or a lot of the sightings from aliens, happened at these intercontinental ballistic missile sites, these missile sites. That's where a lot of the sightings happen. And then the media spins it that the aliens are trying to, maybe get involved and harm us, or that's not a good thing that they're there. What's interesting is the documentary talks to the people that were at the sites that saw the sightings, and they felt at ease. They felt comfort that the aliens were there, basically saying as a sign that if we are here to blow ourselves up, they're here to protect us and make sure that we don't blow ourselves up. And they're here they know that we have missiles here, and if they ever get launched, they're here to make sure they don't harm us. So I don't know. That's an interesting perspective.
Last thing on aliens before we wrap up. A couple weeks ago, I mentioned ancient architects. It's actually ancient apocalypse. And it's ruined my life, so definitely check it out. It's amazing.
I'm tired of
Is it
watching
one
it.
episode or multiple episodes?
It's 8 30-minute episodes.
They're
Okay.
really good.
And we talked earlier, but I got my hair cut yesterday. And the poor lady, I talked to her about it the whole entire time. But
We have too much information. This is why we all are going
That's the
crazy.
problem.
We have
There's
too
too much
much
information.
information.
We're gonna have to
out
back
there.
up
you
the
go into
cancel
something
section.
like that and get right
The
into
cancel section. We're gonna start incorporating an alien section.
This hairstylist was like, "Sir, you're at Sports Clips. Generally, we talk about the Cavs here."
Well,
All
guys,
right.
this was a fun one. I'm looking forward to next week as always. Thank you to every listener for joining us for this week's Capitalist Investor.